The Tata Group has created many multi-baggers in the last few years, making its shares the darling of retail investors. One such company is Tata Group's retail powerhouse, Trent Limited. At the end of 2020, Trent's stock was priced at about 687 rupees. By October 2024, it had soared to an all-time high of 8,345 rupees, an astonishing 12-fold increase. But a 35% drop since then has left investors questioning what's next. Is this just a temporary correction or a sign of deeper concerns? In today's video, we break down what's driving the decline and whether investors should be worried. Welcome to Bottom Line by Grow. In our very first episode today, we will analyze Trent Limited. Trent Limited is a subsidiary of the Tata Group. It is an umbrella company of the Tata Group which manages a variety of retail businesses in India. These include Westside, a major fashion retailer, Zudio, a value-focused fashion chain, Utsav and Star Bazaar, a player in the food, grocery and everyday essentials segment. Now, when Trent Limited announced results for the December quarter, that's Q3 FY25, with a revenue of 4,657 crore rupees, this was a growth of almost 34%, but it was down from about 40% growth seen in Q2. Now, in a way, this explained why the stock started to correct. But can a mere dip in the company's revenue growth push investors to the edge? Let's try and understand more. Several key factors have contributed to the recent decline in Trent stock price. Now, these include below expected results, steep valuations, and more. Let's analyze them one by one. The first and most immediate trigger was the company's performance in the December quarter, Q3 FY25, which fell short of market expectations. In Q3 FY25, Trent Limited reported revenue and profit that came in below market expectations for the second consecutive quarter. This shortfall between actual and expected results led to an initial negative reaction from investors. But there is more to the numbers than meets the eye. While Trent Limited's revenue grew by nearly 34% in Q3 FY25, this decreased from about 40% growth observed in the preceding quarter, Q2. Now, this decline in growth became a significant concern for investors who have been used to seeing the company grow at a faster pace. Moreover, Trent grew at a rate of over 50% in the past quarters, barring Q2 and Q3, which further dampened investors' confidence in the stock. This is not only at the consolidated level, but also reflected in the standalone revenue growth. Now, a second contributing factor to the stock's decline is the slowdown in per-store revenue. This decline has been observed for the past 2 quarters, both on a quarter-on-quarter basis and a year-on-year basis as well. This suggests that while the company is growing its overall revenue, the performance of individual stores is not keeping pace, which too negatively impacted investor sentiment. Let's check out this table. If you look at year-on-year growth of per-store revenue, it has slowly been on the slide. From nearly 22% growth in Q1 FY25, the per-store revenue came to 11.83% growth in Q2 FY25 and now stands at 7.08% growth in Q3 FY25. This is reflected in the stock price movement as well. The stock nosedived by over 8% immediately after the Q3 FY25 result announcement. A similar event occurred in Q2 FY25, where the stock fell by 6.5% following the announcement of results, indicating a pattern of stock price sensitivity to earnings reports. Third, and a key contributing factor to the company's prospects is the likely increase in competition. The launch of the Shein India app by Reliance Retail on February 1st has introduced a new element of uncertainty for Trent. The return to the Indian market of Shein, the Chinese online fast fashion app, after about 5 years since its ban, could intensify competition in the online fast fashion retail sector. This increased competition has made investors jittery about a potential impact on Trent's market share and revenue prospects, leading to a sell-off in the stock. As you can see from the table, Shein directly competes with Zudio on pricing across key fashion segments, including jeans, joggers, shirts, and t-shirts for both men and women. The competition is particularly intense, with both brands striving to offer budget-friendly options in the fast fashion market. market. Additionally, the higher valuation of the stock is a cause for worry for investors, especially at a time when the company could face competitive pressure. As such, the price to earnings ratio of Trent Limited as of February 2025 was 125 times versus the 3-year median PE of 177 times. While the valuation appears to have mellowed down on account of the last 2-quarter performance, investors should keep an eye on this metric going forward. The company's prospects remain bright. While factors including moderating growth and steep valuations weighed on investor sentiment, pushing the stock down by about 35% from its 52-week high, the company continues on its growth path. Trent's sales performance has remained strong. This indicates that the company's products are still in demand and customers are continuing to patronize its stores. The company has demonstrated significant year-on-year sales growth of 34%, along with a 34% increase in net profit to 497 crore rupees. This strong year-over-year performance underscores the company's positive trajectory despite the recent slowdown. Further, Trent has also seen impressive quarter-on-quarter growth with a 12% revenue increase and a 48% net profit increase. This is better than its peer companies such as V-Mart Retail Limited. Also, the company has been actively expanding its store network, which has been a key driver of growth. In the most recent quarter, Trent added 58 new Zudio stores and 12 Westside stores after accounting for store consolidations. Store consolidation is a strategy followed by companies for optimizing their presence in certain areas. This is done by closing underperforming stores and enhancing the efficiency by resizing stores or strengthening the profitable locations by optimizing store formats. This strategy helps Trent Limited maintain profitability, reduce costs, and ensure sustainable growth in its retail operations across brands like Westside, Zudio, and Star Bazaar. The company's total store portfolio has now surpassed the 900 mark, reflecting its aggressive growth strategy. Now, beyond its clothing brands, Trent's food and grocery business, Star Bazaar, also saw substantial growth with a 25% revenue increase, supported by a 10% same-store sales growth. This indicates a diversification of revenue streams for Trent and a strong performance in multiple segments. So, what do we learn from all of this? Well, as per media reports, multiple analysts have cut their price target on the stock by 14% to 16% after its December quarter results. But despite the price target reductions, analysts remain optimistic about Trent's long-term growth potential. However, they also highlight the stock's stretched valuation, which provides a lower margin of safety. This indicates that while the company's fundamentals are strong, the stock might be overvalued and investors should be cautious. That said, Trent is expected to continue its outperformance when compared to its peers, aided by the company's store expansion and consolidation in some areas. All these indicate that the company has a unique market position and growth strategy and is expected to yield long-term benefits. Another point to note is that Trent's shares are still priced more than 35% higher than they were a year ago. As such, keep both short-term challenges and long-term potential of the company in perspective before investing in the stock. If you are an investor in Trent, what are your thoughts on the company's future prospects? Share your views in the comments, and for more such videos, don't forget to subscribe to the channel.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.